What's going on, guys? It's Andy. Welcome back to another episode on the Andy Kandola Show. In today's video, I am going to go ahead and open up the blinds, share with you guys all the different stocks that I have in this portfolio. The portfolio has finally hit $99,000. Now, I will tell you guys, a day ago, we actually crossed over $100,000 because just in the last day, my losses are $1,027.86. The market is down. Everything is in the red today, and the Dow Jones actually went down about 358 points. At one time today, guys, the Dow Jones was down over 500, and now it is down 358 points, or 30,578. So the market is a little volatile. It is making a small correction, but it's not the correction that I'm anticipating. I do believe we might see a bigger correction coming up, but at this point, as these small corrections go ahead and take place, I do like to go ahead and dollar cost average into the account. So I am investing. I invested about $300 just today in the account. Now here we go, guys. As far as the total current value in this portfolio, it's $99,117. I am in the middle of a trading day, so we will see some difference in the current value of this portfolio. But as far as today's gains go, I am down $1,027 or 1.03%. In the last week, guys, we are down $313 or 0.32%. In the last month, we are up $2,852 or 3.05%. In the last quarter, we are up $11,601 or 14.71%. And then in the last year, we're up $16,452 or 33.64%. And then overall, all time, because I started this portfolio about April of last year, the portfolio is sitting at the same gains. Now, as we go ahead and go down in this portfolio, we can tell the current value just changed here as well. So we are up at $99,263. But here we go, guys. The portfolio, I have it broken up into the 11 different sectors within the S&P 500. Now, additionally, I do have a growth pie here as well. So I'm going to go ahead, share with you guys every single one of these sectors and the stocks that I have. In total, I have about 44 stocks in this sector. But just jumping into this, guys, the way I have it denominated is I have technology allocated as 24% of my overall target allocation. From there, I have growth allocated at 22%, real estate at 9%, communication services at 9%, financials at 9%. Consumer staples at 6%, discretionary at 6%, industrials at 4%, utilities at 4%, healthcare at 4%, materials at 2%, and then energy at 1%. So all these are the 11 different sectors, and then I have my growth pie, which is the 12th pie. So in total, I have 12 pies, but 11 of those are divided up into 11 different sectors. Now, the reason why I like to go ahead and diversify it this way with M1 Finance is because I can go ahead and set a target allocation and be diversified in every single sector. I like the idea of having every single sector in my portfolio because if one sector goes up, I'm in it, so I can go ahead and gain those profits. And I believe in every single one of these stocks. These are basically long-term stocks that I'm basically looking to hold on to in this portfolio. But let's go ahead and jump right into it as far as the different stocks that we have. Now, in technology, I will show you guys my overall returns. The overall returns in technology, I've gained $5,323 or 55%. But I have my core 5 here. These are my core 5 technology stocks that all pay out a dividend. Starting with Apple, which is allocated at 60%. From there, Nvidia allocated at 18%, Microsoft at 8%, Visa at 8%, and then Accenture at 6%. I love every single one of these stocks. I'm basically very bullish on these stocks for the next 10 to 20 years. I'm basically looking to hold on to these for a very long time. As far as my conviction goes, Apple, Nvidia, and Microsoft are basically my biggest convictions in this sector. But that's going to be the technology sector, guys. Now, just jumping into the next sector, which is going to be the growth sector. Now, within the growth sector, this is actually one of the newest sectors that I actually started in this portfolio. Within this sector, I'm up $3,738 or 38%. All these stocks are basically leaders in their space, or they're innovative companies that are looking to basically disrupt the industry as far as whichever industry that they're in. So now in this, I have some of the biggest players that I'm sure probably all heard of, but I have Tesla in here. Tesla, I have 32% allocated. And then I have Peloton, 18% allocated. From there, I have Lemonade, 10% allocated. Airbnb, 10%. Shopify, I have 8% allocation. Zillow, I have 6% allocation. And then the last four, Uber, Square, Amazon, and Lululemon, I have 4% allocation. Now, as far as my overall profits, I am up the most in Tesla. I'm up about 70% or $2,219. From there, Peloton, Lemonade, I'm up about 38%. And then Airbnb, I actually bought this at their IPO and the stock's doing really well. Huge believer in this company. I'm up about 55%. Some of the other stocks, I'm about break even or down a little bit. Like Uber, I'm down about 10%. But these are all basically disrupting industries, or they are cream of the crop when it comes down to their sector. They're basically the leaders and the innovators in each one of their sectors. So I'm a huge believer in all of these stocks. Again, these are going to be stocks I'm basically looking to hold on to for a very long time. So that's going to be the growth stock, guys. Now jumping into the next sector. The next sector is actually going to be in real estate. Now within real estate, I'm up 14.56% or $996. I believe there's a lot of potential for the sector to go up in 2021. I am a huge believer in real estate, and because real estate's never going anywhere, these stocks are going to do just fine. Plus guys, both of these stocks in real estate, they pay out a dividend as well. With Realty Income and Store Capital, I'm basically allocated 45% towards Realty Income and then 55% towards Store Capital. I'm up 21% in Store Capital and 12% in Realty Income. But because both of these stocks pay out a nice dividend, I love these stocks. With Realty Income, they pay out a dividend of 4.52%, and then with Store Capital, I believe their dividend is very similar. It's 4.27%. But both of these are basically real estate investment trusts. They're both landlords that have commercial leases and commercial tenants, and they're triple net leases. So both of these are a little bit lower on the risk curve, but at the end of the day, they are very good real estate stocks. But now let's go ahead and jump into the next one. The next one is going to be communication services. Now, communication services is another sector that I think is going to go ahead and grow throughout this year as well. But within communication, I'm up 19% or $1,005, and my current value is $8,790. But I have 4 stocks in the sector, AT&T being the top stock that I have in here. I do have 15% allocated. I did change the allocation targets on these because I'm a bit more bullish on Disney and Comcast. So as we can tell, the target allocations I did recently change. In Disney, I have the target allocation at 50%, Comcast at 20%, and then T-Mobile at 15%. Now, here's the thing. In this sector, Comcast and AT&T do pay out a dividend. Disney used to pay out a dividend, but they cut their dividend because they took a hit with their theme parks. And then T-Mobile is basically just growing at such a good pace. I believe they are going to be one of the leaders when it comes down to cell phones and wireless communication. So these are the 4 bullish stocks that I'm very bullish on within the sector. I am up 7% in AT&T, Disney I'm up 43%, Comcast I'm up 34%, and then T-Mobile I'm still down about 2.79%. And guys, probably the biggest risk in here is AT&T, but they pay out a really nice dividend at 6.81%. So I am long on the stock. They still have a lot of little kinks to figure out, but I'm still bullish on that. But now jumping into the next sector here is going to be financials. Now within financials, we are up 32% or $1,775. Now all these companies do pay out a dividend as well, and I have 4 companies in my financial sector. Now as far as the companies go, I have JP Morgan Chase allocated at 40%, American Express at 30%, Bank of America at 15%, and Toronto Dominion Bank or TD Bank at 15%. Financials have rebounded at this point. The Fed did do a stress test on the financial companies, and I should say the banks in the US, and all these companies actually passed the stress test. So a lot of these companies and a lot of the banks have gone up at this point. I do believe there's going to be more upside in some of these companies, but the biggest companies that I'm very bullish on is JP Morgan Chase and Bank of America as far as the banking sector goes. And then as far as a travel play here, American Express is the one that I'm bullish on as far as more people starting to go ahead and use their card as they go ahead and start traveling. And then TD Bank, I just love this bank. They're basically one of the biggest banks in Canada, and they're really well diversified. So these are going to be the financials. As far as my overall profits go, JP Morgan Chase, I'm up 48%, American Express 26%, Bank of America 49%, Toronto Dominion Bank 58%. But now guys, let's go ahead and jump into the next stock here. And the next stocks are going to be in the consumer staples sector. Now consumer staples, I'm up 21.51% or $921. But I have 3 stocks that I'm very bullish on. I have Costco, Cisco, and Walmart. All three of these stocks do pay out a dividend as well. But Costco, they just have a very strong ecosystem. Huge believer in that company. Cisco, I personally deal with Cisco because I do have restaurants that I own, and Cisco is basically our main supplier. And as the restaurant industry goes and rebounds, I believe this company just has a huge potential to grow. And then Walmart is basically the leader in their space. And long term, with Walmart getting into e-commerce with Walmart Plus, I'm bullish on the stock as well. So as far as the stocks go, I'm up 11% in Costco, up 50.87% in Cisco, and then up 7.76% in Walmart. But these are going to be my three plays in consumer staples. Now, if we go ahead and jump into consumer discretionary, I actually have 4 stocks in consumer discretionary, but we are up 24.23% or $775 in the sector. And then the 4 stocks I have are some of the leaders in their space and probably names that we've all heard of here, which is going to be Home Depot, Target, Starbucks, and Nike. I have a 25% allocation, which is evenly spread out between all 4 of these companies. So I am very bullish around these 4 companies, and these are the 4 companies that I like in the sector. In Home Depot, I'm up 18.54%, Target 12%, Starbucks 27%, and then Nike about 24%. Some of these companies as of today, I believe, are down. I did notice that Starbucks, because they're losing their COO to Walgreens, is down a little bit more. They're down 5.90%. But long term, their business model, I mean, it's coffee. They have it figured out. They have their brand figured out. And I believe this company is just going to be growing more and more throughout the next couple of years here. So these are going to be the companies that I have in consumer discretionary. But now, as we go ahead and jump into the next sector, that is going to be industrial, which is going to be 4% of the overall portfolio, up 17.41% or $512 in industrials. And I have 3 companies in here. I have Waste Management, Union Pacific, and then Honeywell. Basically, as far as the allocation, I have 40% allocated towards Waste Management, 30% towards Union Pacific, and then 30% towards Honeywell. Very bullish on all 3 of these companies. These are large companies that are going nowhere and that are the leaders in their space as well. So I love all 3 of these companies. I'm up 4.51% in Waste Management, 21.86% in Union Pacific, and then 37.87% in Honeywell. So these are going to be the stocks in the industrial space, guys. But now let's go ahead and jump into the next one, which is going to be utilities. And just to keep it very simple, I actually have 2 stocks in utilities. I'm up $796 in this sector or 20.28%. But within utilities, and I might need to refresh this, I have NextEra Energy and Duke Energy. Is showing I have a loss of 3.45%, which is actually not true. There we go. I actually have a gain of 39.88% or $564 in NextEra Energy. And then in Duke Energy, I have 19.59% as far as my overall gain. But NextEra Energy, I have 70% allocated within the sector, and then Duke Energy, I have 30% allocated. NextEra Energy, I'm very bullish on this stock because they're basically the innovators when it comes down to renewable energies, solar energy, wind energy, and then Duke Energy basically does some of the standard utilities like gas, electric. But these are the 2 stocks, guys, within the utility space. Now, if we go ahead and jump into the next sector here, that is going to be in healthcare. Now, healthcare, I actually have 3 stocks in here. My returns, I'm up 19.11% or a total gain of $706.80. But the 3 stocks I have in here is Abbey. I have 35% allocated there. United Health Group, 35% allocated there. And then Medtronic, 30% allocated there. I'm up 29.11% in Abbey. United Health Group, 13.79%. And then Medtronic, 28.44%. Another sector that I believe is just going to consistently grow over time, and I like to be diversified in this sector. But now, jumping into the next one, it is going to be materials. Now, materials, I do have 2% allocation. I like to go ahead and be diversified in every sector. So I have 2 companies in materials. Up 11.60% or $116 with materials. This is not a sector that you're going to see a huge growth potential, but it's a safer sector to go ahead and put your money in. Plus, these stocks do pay out a dividend as well, guys. They're actually considered dividend aristocrats or dividend kings. So these companies have been paying out dividends for at least the last 25 years up to the last 50 years. So the two companies I have is Lind, which is basically one of the largest glass manufacturers in the US. I have 70% allocation towards this, and then I have Ecolab, and I have 30% target allocation towards Ecolab. As far as my overall returns go, I'm up 10.43% in Lind and then 4.71% in Ecolab. So this is going to be the materials sector. Now, jumping into the final sector, that is going to be energy. Now, energy, same thing. This is basically kind of like a turnaround play. I'm not expecting a lot of growth in the space, especially with battery-powered cars kind of taking over, and less of these energy companies are diversifying in that sector, but I'm hoping these companies start looking at diversifying so I can start seeing better returns in the sector, and then maybe I'll go ahead and allocate a little bit more towards energy. But right now, I only have 1% allocated towards energy. I'm up 2.37% or $19.78. If we actually look at the overall market gains, I'm actually down $24, but because of the dividends that I've gotten $44 in dividends. That's where the overall plus $19 gain is coming from. So in this sector, guys, I have EPD, or Enterprise Product Partners. They're basically one of the largest gas and pipeline distributors in the US and Canada, and I believe they're a monthly paying dividend stock as well. I'm up 37.48% in that stock, or 110%. And then Chevron, I am losing money in. I'm down 7.38%, or about $31. So these are going to be the two stocks, guys, within the energy space. And as we go ahead and look back at this portfolio, because the market is trading, the portfolio is actually up a little bit more. It's up at $99,399. We are actually down $749 at this point, or 0.75%. So as the portfolio is trading, I'm happy to see this portfolio at 99,000. This is the highest that this portfolio has ever been at. I'm hoping the market keeps trending upward and we'll go ahead and cross this $100,000 mark. My goal is to just keep growing this portfolio, and for this year's goal, guys, my goal is to get this portfolio to above $250,000. But now this is going to be a wrap for this video. I hope you guys enjoyed this video. These are basically the 44 stocks that I have diversified in all the different sectors within the market. Now, if you like content like this, guys, and you like the transparency, don't forget to subscribe to the channel down below. Every single video, I go ahead and give you guys an update in regards to the portfolio, and I share with you guys some of the latest news as far as what's going on in the stock market. But thank you for watching. If you're interested in M1 Finance, I will leave an affiliate link in the description below where you do get $30 to go ahead and sign up with them. Honestly, it's a limited time offer. I like M1 Finance. I've used Robinhood, Webull, and Public, and I will say M1 Finance is the best one out there because you can go ahead and diversify yourself and basically create your own ETF. But thank you again, guys, for watching. Until next time, I will see you guys at the next one.